all traders, welcome back to FXCM YouTube channel. My name is David Londoño. I'm a trader and I also do market analysis. Today we're going to be analyzing or studying a regular or typical strategy called Bollinger Bands Squeeze. Let's go into it. I want to start saying that the Bollinger Bands Squeeze is a popular trading strategy that focuses on identifying periods of low volatility, so which are typical followed by sharp price movements. Those are the movements we want to participate in. So the strategy is based on the Bollinger Bands indicator I have here for you, and it consists in the three components, right? We have the middle band. This band is a simple moving average. It's usually 20-period average. We also have the upper band. Also, it's 50% of each, but we have the upper band, the middle band plus twice the standard deviation of the price. It's usually set at 2 standard deviations, but you can use it depending on the volatility of the market you're performing. We also have the lower band, the middle band minus twice the standard deviation of the price. Okay, after saying that, what is the Bollinger Bands Squeeze? Let's get into the strategy. The squeeze occurs when the upper and the lower bands contract and move close together. For example, right here we can see a contraction. Right here we can see a contraction on the bands, right? And this creates a tight channel around the price, right? This indicates a period of low volatility, which often precedes a significant breakout in either direction, upper or down direction, right? So what we want to watch at the strategy, we want to look for these periods where the Bollinger Bands contract tightly around the price, right? The tighter, the more significant the potential breakout. So after we see where the contraction is occurring, we want to watch a strong move is expected in either direction. So traders should wait for the price to break above or below the bands to confirm the direction of the breakout. Here we have the break lower, we also have the break lower, and we have to also understand that the breaks indicates that we are moving below the middle band, okay? Right here we were the upper side of the bands, then we had the squeeze, and then we broke below the lower band and we remain below the middle band, okay? That's what we want to watch in order to participate. That's the strategy. It's a really simple one, and even though we know how to perform it, and we also maybe, combine it with other strategies or other indicators, we can have something really powerful in terms of decision-making for entry points and so on, okay? So it's a simple strategy. Once again, is very useful for identify potential breakouts after periods of low volatility. So by waiting for a confirmed breakout from the squeezy trades can capitalize on sharp price movements in either direction. Right here we found 2 examples going low. Let's see if we can find more examples. We also have others. For example, right here we have a narrowing, right? We have a break up, but then almost immediately went down again from the middle. This is very important. We went down again from the middle line. So this shows that it's not what we want to watch. It's not where we want to participate. It's different than this other example where we remain through the entire movement. You can see we remain just below the middle line. That's very important to keep selling. That's very important. And I recommend you to backtest this strategy. It's very powerful, as I was telling you before. And that would be all for this one, guys. I will see you on the next trading session. Don't forget to share and subscribe. See you then.